Welcome to the weekly Crypto Check-In, your go-to podcast for navigating the wild world of cryptocurrencies, hosted by Andres Sandate and Robert Swarthout. Today, recorded on March 18th, we're diving into the latest market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Good. Hey, Robert, how you doing? How's the week going for you?
Busy. I guess that's every week, but it's starting to feel like a little spring outside, which is nice. We had the cool mornings and warmer afternoons, and I'd imagine this cold snap is our last one for the year. Would be my guess. So,
yeah, when you look at what's happening, I guess overall in the crypto space here in the last week, what's your sense of the news and the barometer?
Kind of a little bit of spring. Obviously, there's the big overshadowing of what's going on in Iran right now, but it does, we'll kind of get to it with the market structure bill. It does seem like progress is being made to kind of resolve some differences, and we actually might get that done. So we will dive into that a little bit later, but
yeah,
we can kind of just get rolling here with our first topic. So, sometimes you just pinch yourself, right? Because it's like you think back a year and a half ago, kind of the state we were in with the previous administration. The SEC kept saying everything is clear, we don't need to give any guidance, all this stuff. And now you have a different SEC, the same organization, different leadership, I should say, giving guidance, connecting with other agencies. It's crazy. So what the SEC's done this time is given further crypto guidance. And this is, instead of just staff guidance, this would be agency guidance. So I guess one level higher, maybe a little bit more, oomph behind it of sorts. So it's under review, and it has to kind of go through an interagency review process, and then the three commissioners can vote on it. And right now they're all Republicans, so I can't imagine that it doesn't pass in this case, since they're the ones writing it. But the chair Atkins was saying how the commission wants to provide guidance where possible that also aligns with what the potential legislation may do. So there's like clarity for market participants. Spoiler, clarity would be awesome.
Clarity.
But it's cool to see at least them doing what they can do, because they can't make laws, but they can provide guidance, which is the closest thing the SEC can do to creating a new law. So
yeah, we definitely I think we'll all benefit from it. So it's a positive, encouraging sign.
Yeah. And it's again, didn't expect it to be part of the news cycle, but it's cool to see more of this is happening behind the scenes. It wasn't just something that came out of all those executive orders that happened early last year. It is more follow through, at least in the SEC's part, to kind of make it clear. So pretty cool. And I don't know how much more of this we need. I would just prefer that we pass the market structure bill, and don't have to ask them to do this, but maybe they can kind of keep providing help where it makes sense. So our next topic, kind of along the same lines, so the SEC and the CFTC, obviously SEC deals with securities, CFTC deals with commodities. They've gotten together and produced a MOU, basically saying, making it clear that the SEC, how they claim tokens would be securities and how the CFTC claims they would be commodities, and basically providing clarity on jurisdiction. They would actually share data and enforcement and try to deduplicate regulation, which, man, this is like music to my ears. But again, rather it be a law than opinions of an agency. So.
Yeah, I mean, one of the headlines from Atkins, I saw that it ends a decade of uncertainty. So, I mean, here we are back to that same word of providing, clarity and just trying to address things. Do you feel like this is, I guess it's a way of showing progress, when I think the big question remains, are we going to get this bill passed this year? Do you feel like these things are a way to show the market momentum and progress around legislation without it really having the effect that the market really wants long term, which is to get the Clarity Act passed?
Get the Clarity Act. I wouldn't say that the market doesn't care about these agency opinions, but it kind of doesn't care. I think that's your
Yeah.
point, because it's
Yeah.
like because we know it's at the whim of the current administration. And I say we very broadly there, but like at the end of the day, I think it has to be law, and not that laws can't be changed, but if you kind of get that in place, you at least have some clarity
Yeah.
for at least for
There's a lot more. Yeah. I mean, there's a lot more than there is. This is not, these first two headlines to me, they're not nothing.
Mhm.
And I think, yes, to think about where we were even a year ago, to see these things come out,
Right.
we can't minimize the two headlines and the impact, because it just to get one of these out there last year would have been momentous. But now I feel like we're all looking to see, when's this Clarity Act going to get passed, and what are the compromises going to be. There was an article that came out, uh, I think it was yesterday or the day before, in the Wall Street Journal, about the head of the is it the OCC, the Office of the Comptroller of the Currency, that regulates the banks.
Right.
And the profile suggests that the banks are being pushed to allow more innovation, and the banks are, particularly the smaller banks, are pushing back,
Mhm.
against the idea of these crypto firms, some of the bigger names that we've talked about on the podcast, being allowed to come in and kind of get these, I guess, these national trust charters. So it's just interesting how much is happening kind of behind the scenes with the bill not actually being passed yet, the Clarity Act bill.
Yeah, and I've had many people reach out to me privately and be like, "Do you think the bill actually passes?" And I think it does. Does it happen tomorrow? No. Does it happen in the next year? Probably. It certainly it may be on the short side of that, if I had to guess.
Yeah.
But at the end of the day, like there's too much happening for it not to happen. I mean, not to be passed. At the end of the day, you have the Nasdaq, you have the NYSE, like working on bringing stuff on chain. This bill will support some of that. You just have too much of what many would consider traditional finance that is doing stuff in crypto at this point. Yes, they could all give it up if they had to, but like I think there's enough momentum to get it done. And again, the hang up, and we'll get to the market structure bill in a bit, but it's been the banks.
Yeah. Yeah.
If it wasn't for that, it'd be probably passed and signed by the president already. So
Yeah.
yeah, we'll get to that. So our third topic here. I never thought we would ever talk about Mr. Beast on this podcast. For those
Mr.
that
Beast.
somehow, for those that do not know, Mr. Beast is, I think, the largest and biggest followed YouTuber on the planet, if I'm not mistaken. If not, he's definitely top three. He has like billions of views a month. I think it's like 5 billion views a month, and 446 million subscribers across all of his different channels. Like he lives in North Carolina, records there, but his videos go international and they get translated in other languages and all sorts of stuff. He's built quite the media little empire. But the news here is Bitmine, which is a Ethereum treasury company. They invested $200 million in Mr. Beast.
Hmm.
That's a serious number. It's
Yeah.
not like 10, 20 million. I mean, even those are big numbers, but like 200 million. And they're not buying necessarily like views for their product. To me, they're buying reach. And I kind of read this article and it totally
Yeah.
resonates with me, because it's like, all those subscribers, and they recently filed for a Mr. Beast financial trademark. You couple this with Mr. Beast recently bought what was almost a defunct app that was around finances, but targeted at teens, trying to help them be good, and young adults, trying to help them be good financially. And I'd imagine that, like, with his reach alone, like, you just all start mentioning it in some of his videos and change whatever they want to change about it, and poof, you might actually have a real business here, just because, again, the Mr. Beast being behind it. So
Yeah. I mean, there's just reading and sort of picking up on what you said out there. I mean, if you think about some of the backers, it's easy, I think, on the surface to say, oh, this is all just a bunch of YouTubers and Bitcoin and digital assets. Like, the whole thing is easy to sort of write off until you start looking at who's involved behind the scenes. So you mentioned, the huge YouTube audience, the $200 million equity investment, huge,
Right.
huge numbers, big numbers. Key investors in Bitmine, which made the investment, are ARC's Kathy Wood, Bill Miller, famous from Legg
Mhm.
Mason, like
Yeah.
a famous mutual fund investor, and then Galaxy Digital. Galaxy Digital, the I guess the crypto digital assets arm from Fortress's former founder Mike Novogratz, correct?
Correct. Yes.
So some big names there. And then you think about how his audience ages over time, and you think about some of the moves that they've made from a fintech angle perspective. What's interesting is that Beast Industries filed a trademark
Mm.
to um, to basically to get a trademark application on the name Mr. Beast Financial,
Right.
which is going to involve listing services such as potentially a crypto exchange platform, consumer lending. So to your point,
Mhm.
trying to bring this generation of 9, 10, 11, 12-year olds, probably mostly boys, but I could
Correct.
be wrong. I don't
Yeah.
watch the content. I do have 9 and 11-year-old boys, and I do know they are on YouTube way too much, and we
Mhm.
always are turning off YouTube, or we feel like we're blocking YouTube, and somehow like the apps
Mhm.
always get through. But we all own so many devices.
Yeah.
Like when you turn around, right, they're finding content, and it's usually on YouTube.
Mhm.
And it's not always Mr. Beast, but it is a gamer or it's some prolific person out there on social media.
Yep.
Um, what I think is pretty fascinating is you step back and look at this, like you said, from a content play, from a reach standpoint, trying to introduce financial services to this next generation. You got to think they're going to do their financial services providers might not
Mhm.
be the financial service providers of a generation or 2 generations, certainly 3 generations ago, right? I
Right. And
mean, are they gonna bank with Merrill Lynch? Are they gonna bank with Bank of America? Are they gonna bank with Wells Fargo, or Northern Trust? Or are they gonna go with, some neobank or some online fintech platform that, is present where they're hanging out and where they're living?
Mhm.
It's pretty interesting.
Yeah, it just his reach and the number of views and subscribers, $200 million almost seems like a steal. If you just do some rough math here, like if you say, okay, they're only going to get 1 month's worth of views out of this $200 million, it's 4 cents a view. Okay, that's pretty cheap in the view world. Or if you kind of look at it from a per subscriber, it basically paid $2 per subscriber. And at the end of the day, especially if you get into financial services, that is pennies. like, so
Yeah.
it seems like a smart move. Obviously, they have a lot of execution they have to do on this, but it does seem like an interesting step forward. So,
Yeah, because that fame on social media, his is more than just 15 minutes, right? His is being built around something more durable. He's now aligning himself with brands and offering more services and offering other things beyond just the content. But yeah, it's pretty fascinating. I mean, one of the things that I'm trying to do is figure out, okay, how do you create authentic content? We're doing that, right? How do you create sort of authentic content away from some of the mainstream? So I think it is all about now having a relationship with your audience and trying to create content and offer it in a format and in a way where the listener, viewer, consumer feels like they have more of a relationship and they're getting something that they're not going to get in the mainstream and from the mainstream outlets and platforms. And he's obviously been
mhm.
somewhat of a master at doing that in the last 5 years. So no
For sure.
doubt they're trying to find ways to monetize.
Yep, could not agree more. So our fourth topic here. So Coinbase Futures, obviously it's their platform for trading futures on crypto, is now available via Ripple Prime. So Ripple Prime is the Hidden Road acquisition that they did. They've rebranded to Ripple Prime, growing like crazy. We've talked about that, I think, an episode or two ago.
Yeah.
But it's cool to see kind of it flow through and other crypto companies helping other crypto companies. I would say helping, but like partnering. Normally, you would think they would be somewhat competitive, but in this case, I think Ripple's exposing their customers to the Coinbase product is cool because the my understanding is that the typical customer of Ripple Prime would be a traditional finance or oriented individual, or
Yeah.
that's the market they come from. So just I guess more of the merging of the two different, new and the old world, effectively. So
Yeah, you think about who are going to be the dominant large organizations that emerge out of this era of digital assets and crypto, right?
Mhm.
Will there be a set of household names that we'll look back on in 5 or 10 years and say, yeah, all that was being kind of built and put together in, 2025, 2026, 2027, right? Or is
Mhm.
it going to be uh, the traditional bigger financial institutions that make acquisitions, right? And so in 5 years, people won't, think about, okay, that was the Hidden Road acquisition that allowed Ripple to get into prime brokerage, or will it be a Coinbase that's one of those large firms? It's fascinating to think about this space and where the road is leading,
Mhm.
and the big names and big companies that are making moves today, in some cases, right, without a real clear roadmap on even what the legislative and regulatory environment even looks like. Like if you're investing, um, in this space, like you certainly have to be able to handle volatility, but you've got to also be able to sort of think about the combinations and the chessboard in a strategic way. Because I got to think there's going to be a lot more partnerships and a lot more M&A and a lot more
Yeah.
combinations over the next 5 years.
Yeah, and I think the part that I would add to that is like, it's if anything, it's cloudy right now, it's murky, that kind of
Yeah.
stuff. I mean, obviously, there's more risk in an environment like that, but like, I mean, I think that you're getting paid, if you want to use that analogy, for taking that risk, because clarity is almost certainly coming. I think it would be kind of out of left field if it doesn't come, and I think that we're not too far from things, quote unquote, being obvious. So we'll find out here soon enough, though. Next topic, Ripple and MasterCard partner up on-chain payments. This is cool. MasterCard has been really trying to like be forward thinking. Not that Visa's not, but MasterCard's been more public about it. Visa's taken a slightly different route, but so they're just saying digital assets are entering a new phase. We once ran in parallel, basically in an existing framework. Now it's basically coming to be applied to a practical real world same network for cross-border remittances and B2B money transfers is what they're focusing on at first. So it's cool. We are in a world of exploration, but it's not just like trials. I think this is purely like, or excuse me, not purely. It's truly this is trying to do something with crypto now. So
Yeah, I mean, they announced this big, this big, they being Mastercard, this new crypto partner program, with 85 companies across the digital asset and payment space. So a lot of big names, and then this deeper Ripple specific, integration, which is still rolling out,
mhm.
and yeah, the real time blockchain settlement. I mean, we keep talking about blockchain settlement and tokenization like these are concepts and technologies and solutions that have been around for 10 years, when in reality, it's all
Right.
very new.
Yes.
And I think, even the everyday user of, um, you know, just think about it, like your everyday user of the debit card, and you just kind of take for granted like money moving around
Yeah.
and sending ACHs and sending wires, like all this stuff happens sort of instantaneously today. And
Hmm.
to think now that like it's all going to be on chain and it's going to be I don't know, like verifiable, there's going to be a lot more transparency, there's going to be less, I guess, latency and delay, hopefully
Yeah.
less fraud, hopefully, you know the tens or hundreds of billions of dollars that are lost or at least frozen or
Mhm.
delayed, that stuff will speed up. I think we'll look back in 5 years, probably even maybe even less time, and say, how
Yep.
could we've ever done it slower or that old way?
Yeah. I mean, it feels fast now is going to absolutely feel slow 3 or 5 years from now.
Yeah.
Money largely works in the U.S. consistently, but there's still delay. I mean, like from a merchant's perspective, if you go to the store and buy something, they're probably not seeing that money for 2 days at best, if it's all business days in there. In a tokenized on-chain world, that's almost instant. Is the point
Yeah.
that we can get to? So that helps, and just there's still
I mean,
weekends.
I'm waiting on a receivable, right? I'm waiting on a receivable
Yes.
for my Endurance X platform, and you know, it's just the way that things are paid today, right? I mean,
Mm,
you're still waiting on paper checks, you're still waiting on ACHs, you're still waiting on, right, these processes, and to some extent, it's like you'll look back. I think we'll look back as business owners and
mm.
say, why couldn't we just offer like like a tokenized receivable structure?
Right. Yeah.
And it's coming, it's coming.
Yeah. Yeah.
Yeah.
There's a little bit more patience. So this next topic blew me away when I saw this this headline, I guess you can call it. So this happened, gosh, almost a week ago at this point. But so there was a user using the blockchain Aave, so AAVE. It's the ticker is literally AAVE as well, and they were trying to basically swap um, Aave for $50 million in UST, so Tether. $50 million, a lot of value here. They're doing this on a smartphone. Okay, on a Surface, not a problem. It seems like a big transaction to be doing on a phone, but whatever. Maybe I'm old. So they were presented. The app worked as it should have been. I should say this up front. This person had to have been distracted. So they basically were converting in the app again from Aave to USDT, and the slippage. It was not slippage, but since there wasn't enough liquidity in the market, the user was presented with basically saying, "Hey, the price is not going to hold up." Effectively, are you sure you want to do this? And in return, they turned $50 million, and they got gosh, make sure I get this number correct. They got $35,000 in exchange.
Hmm.
Not a great trade, especially when you're going to stablecoin. It just blows my mind. There was all sorts of rumors about like, oh, it's slippage or all this stuff. No, I mean the guys that run the Aave app and interface kind of came out and kind of basically, I wouldn't say CYA, but kind of for them, and I tried to talk through it. But yes, there was $600,000 in fees collected. There was all sorts of what you would consider things wrong with this transaction, but the user approved it, was prompted, I believe, 2 times, and clicked through, and again turned $50 million into 35,000.
Wow. That's not your everyday going to Vegas on a bender.
Right, and there was like no excitement. It's not like you got entertainment out of it. I mean, maybe post entertainment of sorts, but yeah, man, it's just brutal. So I don't know. This is DeFi, right? I mean, the system worked as it was designed. The user probably should not have accepted it, you would assume. But at the same time, it was their choice. There's people online saying, "Oh, the app shouldn't let you do that." I'm like, well, maybe. I mean, maybe the person should make their own decision whether they want to do this or not. Obviously, they
Yeah.
wanted to. So I
Yeah.
don't know.
Wow, that's wild. Yeah, it makes you wonder, was it a fat finger thing? Going back to that infamous trading.
It might have been fat finger, but then there was multiple prompts because
Right.
the market wasn't going to hold up. So they had to like get through prompts. It's not like you fat finger it 3 times in a row, or maybe you do and you're distracted. I don't know. I've never again lost $50 million effectively on a trade, so I would hope never to be put in that position. So, anyways, I guess we can laugh about it. Obviously, it wasn't our problem, but somebody obviously did not have a good day about a week ago.
No,
Um,
no, they couldn't have.
yeah. So our second to last topic here, the Senate passes a bill that included a CBDC ban until the year 2030. I guess that's a good thing. I am not quite sure why we were waiting until a certain year to make a decision again. It seems like it should just be banned until we don't want it to be banned. I Congress loves doing these things where there's these imposed time clocks on things. Funding the government is one that comes to mind since we're in the middle of
Right.
an unfunded government.
We'll
But
extend it for 90 days, and then 90 days
we'll
comes
do
in a
this
blink.
again. Yeah. Anyways, but yeah, it was a bipartisan vote. The Senate passed it, the legislation in 89-10 voting. So I don't think the U.S. needs a CBDC personally. I think other countries will do it. The EU probably is a bloc will do it, but I think the U.S. kind of finds ways to kind of not have to play that game at the end of the day. So.
Mhm.
And at the end of it, pull me back up. Republicans have largely been against this because they just worry about privacy and transaction privacy is really where this came from. But again, bipartisan vote seems pretty rare these days. I don't care what the topic is. So it's interesting to see it happen on this. I would love to see them also vote on the market structure bill and have a bipartisan vote, which is probably a good segue. So our last topic, market structure bill update. I'm almost sick of talking about this thing. It doesn't seem like it's actually happening, and then it seems like it is. Last we talked, the banks were, the big banks in particular, were trying to protect the small banks, which I don't actually think is a thing. I think it's just them trying to protect themselves. But we're saying how stablecoin issuers should not be allowed to pay yield to the holders because it's a risk for deposit flight from the banks. Okay, I get why the banks think that. They're trying to protect their business. They didn't care about crypto for all these years. Then all of a sudden there's legislation that try to help crypto. And here they are sticking their nose in the middle of it. But it does sound like that there has been a mediator of sorts. So it sounds like Senators Angela Alsobrooks, a Democrat from Maryland, and Thom Tillis, Republican from North Carolina, has basically brought these two sides together. They're acting like mediators of sorts, trying to figure out what it is. And it looks like, if I get my notes right here, that banks would not, the legislation would not allow issuers to pay yield on balances held, like on deposit effectively. But if they would be allowed to give rewards, quote, in air quotes, for use of the stablecoin in transactions.
Right. In passing, but not in parking.
Correct. Yes. So it's like, okay, split the baby a little bit. At this point, I don't care if there's yield or not. I just want this thing done. And we can deal with yield later. Because again, we did the Genius Act roughly a year ago, a little less than a year ago, and got legislation in place for stablecoins. Market structure bills coming through, and all of a sudden stablecoins come back up. I'm like, it's not your turn. Sit down, please.
Right. Yeah, I mean, I remember we talked about this briefly on the last episode. It feels like the banks have a lot of mistrust or distrust about the crypto space and what their intentions are. And I feel like if they give an inch, they feel like the crypto space is so creative, so
we'll find a way around,
innovative, and they will find a workaround to offer effectively the rewards and the yield to attract those deposits. The fact of the matter is, like I said, there's a great article out there that came out. I mean, it's not an opinion piece. It's just a profile of I think the individual that's running the OCC. And he talks about just the number of banks under $1 billion that have gone out of business in the last, 5 years, 10 years. It's pretty interesting. I mean, it's a high number. There just are not a lot of new banks being formed, and there are not a lot of small banks that are doing very well. And the big banks have been, it's funny, the big banks have been the ones that have consolidated more assets in the last decade. Yes. And at the expense of the small banks. And yet this new entrant that's coming on the scene in the form of crypto is like Big Brother is saying, we got to protect little brother, the small bank, when in reality, it seems like the structure of the way banking is now being regulated, it's like pushing the big banks to be these. Well, it is. They can't fail. They're too big, and it's come at the expense of the small, community banks. And it's fascinating, to see. I agree. I mean, I think there's aspects that are now being relitigated in this, in this market structure bill that we thought was going to be, that we're going to get put to rest. So yeah, we're not in June, but I'm hopeful we can get something done in the next 2 or 3 months. And like you said, maybe the long term is it goes past, the elections. I can't believe I'm saying that on the air, but it does feel like there's momentum to get it done still.
Yeah. And, I had read something that was just more of an opinion about like why the banks are being so protective, if you want to consider it that, of the small banks. And they kind of twisted it around where, okay, if there was a world where yield could be paid on parking stablecoin deposits, all of a sudden your community bank may offer a stablecoin, not necessarily be an issuer, but like may give a better rate on a stable coin than they're giving on their dollars, and all of a sudden they are a stronger bank all of a sudden, and they're not as much of a target for the big banks. So it could be under the veil of trying to be helpful, but they're really being helpful to themselves, because they want to keep their competition weak at the same time.
Yeah.
So,
yeah.
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 But yes,
I can see that.
Banking is a interesting challenge, and lots of politics outside of just normal politics within banking. So,
Yeah.
anyways, well, I think that's a wrap for this episode of the Weekly Crypto Check-In. Keep updated with the latest crypto insights by searching Teton Crypto Capital or the Weekly Crypto Check-In in your favorite podcast player. Leave us a review and share your thoughts. Like our LinkedIn Teton Crypto Capital page. And until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.